Hey everybody, this is the 2020 complete guide to whole life insurance. Now, this is a big topic, so I'm going to do my best to be thorough and be efficient because I value all of your time. I want this to be an excellent resource for you, something that you can bookmark and reference later, something you can link directly from your website. I want this to be something that it's designed for you. Please let me know in feedback if there's anything you want added to this video. Now, the first thing is, what is whole life insurance? Whole life insurance is going to be the type of life insurance that never expires, it never runs out. It's going to be something that in most cases is going to lock not only your health, that's always the case, but usually it's going to lock price and lock coverage, but not always, because there are exceptions. There's universal whole life insurance that has an increased price point later on in life, as well as an increased cash value and potentially death benefit, things like that. Now, traditional whole life is what I'm going to mainly focus on for the purposes of this video. And traditional whole life insurance is going to be usually 5,000 to 40,000 in coverage. If you are exceptionally healthy, let your agent know because you might be a candidate for reduced cost 50,000 to $5 million whole life insurance. Now, it gets really expensive in the whole life insurance category if you go above 100, 200,000, even if you are exceptionally healthy. So those are great, great policies, but you have to be on one or fewer prescription medicines, no moderate, and in a lot of cases, no minor medical conditions, very clean medical history, and close to an ideal build in terms of height and weight. So if you meet all those criteria, make sure, again, let your agent know because you can look at jumbo whole life and it's a great reduced cost whole life insurance policy for larger coverage amounts. It's a wonderful thing. Now, traditional whole life insurance, I mentioned cash value. This essentially it's a value that builds up inside the policy and it's something you can tap into at any time. But you need to understand this is very, very important. If you pull money out of that cash value, it's going to negatively impact your beneficiaries because it's that much less that they will receive. Also, every time you pull money out of cash value, it's a tiny little loan with a small interest rate. And so a lot of people are told by agents, and this should be criminal in my mind, but a lot of agents are telling their clients, don't worry, in 20 years you can stop making payments. Your policy will make those payments for you. It's a terrible thing, terrible advice to tell clients because what happens is over time, once they stop making those payments, and it's the cash value that makes those payments, it's going to deplete the cash value, minimize the death benefit to your loved ones, which is the whole reason why we get these policies, is to benefit our loved ones. And what can happen is it can get to the point where if that cash value is completely eliminated, it will dissolve the policy. It's gone. You don't get a check, your loved ones don't get a check, there's nothing left. It's terrible advice to give. And it's a sales tactic, and it should be criminal. It should be illegal to do that. But it's extremely common, and I run up against it several times per week easily. Oftentimes, it's about once per day or twice per day I come across that. So I hope that clarifies that issue. Now, some other benefits of whole life insurance. They're typically a lot easier policies to qualify for. There's no medical exam. So you don't need to meet with a paramed, anything like that. And these policies are clean and simple. You set up a death benefit amount, let's say it's $20,000. And by the way, these make the absolute best burial insurance policies, whole life structured policies do. So let's say it's a $20,000 death benefit. When you die for any reason, as long as it's not suicide, self-inflicted intentionally, then that $20,000 is what your beneficiary will receive when you die. Now, in some cases, with some companies, some whole life programs, there's also going to be some living benefits. That can be things like losing your activities of your ADLs, the activities of daily living. It can also be terminal, critical, chronic conditions that you develop while you're alive. And getting that death benefit earlier. Some of these companies offer these things. Some companies offer disability coverage as well. Some forms of income replacement, which is really coming in handy now for people with coronavirus. some of these policies do offer those things. Most do not. And the ones that do offer it, there is a premium that's charged. I mean, it's higher cost if you want to have those benefits. Now, these policies, they have the cash value. They have the level, generally a level, death benefit. There are exceptions. You can get policies that will increase or decrease in cost and or in coverage. But 9 out of 10, in fact, 95 out of 100 are going to be getting traditional level whole life insurance. Okay, and so it's going to always have the same monthly cost. Cost will not increase over time. And again, the policy does not expire. Now, if you get this policy when you're younger, let's say you're in your 20s, 30s, or even 40s, and you keep this policy, eventually the policy will mature. Now, what that means is that you don't have to pay into the policy anymore. Okay, so it reaches a point where it's fully paid up, and you can choose. Either the money can be sent back to you, or you can just let that policy sit out there, and then when you pass away, it's all paid up now. And that policy funds, the death benefit, will be sent to your loved ones upon your death, and it's covered. So that's a beautiful thing. It's not like you have to pay forever. It's just until the maturity date. So I hope that is helpful. Now, a couple other really quick things. There are different forms of these whole life structured life insurance policies. And there are alternatives to these. If there are term life insurance policies out there, accident-only life insurance policies, various forms of return of premium life insurance policies. But these traditional whole life insurance policies, these are, they're considered the best of the best by most people in the life insurance industry. And again, it's because you don't have to worry about getting reinsured. So when you get your policy, make sure, of course, that it's affordable. That is crucially important, because if it's not affordable, you're not going to hang on to it anyway, in which case, what's the point? So you want to get something that's going to be affordable. Now, make sure that part is covered. Next part is make sure it's enough coverage, because the price you're getting today is going to lock. So it's not going to go up. So now is the time to get what you can afford, but what's going to be enough coverage. Thirdly, don't get too much coverage. So there's a fine line there. And the only reason why I say that is because it's a lot easier to spend money than it is to make money. So you want to make sure you don't get overinsured, but you want to make sure that it's going to be sufficient to cover the needs of your loved ones. So that brings us into the next little stage is think about why you're getting life insurance, make sure that it accomplishes those goals, and then come up with kind of a range. And then it's your assessment. It's going to be stay within budget, but then also make sure that you're covering your needs. And as long as you do that, you should be in great shape. So I don't want to overcomplicate this. Please reach out to us. Let us know how we can help. If you have some questions, write them down. Just give us a buzz. We'll help you out with whatever you need. All right. Take care out there. Bye-bye.